One of the most common questions I get from people who are starting to look into real estate investing is this: should I invest actively or should I invest passively? And the honest answer is it depends on you and your goals. Not your age, not how much money you have. It's all about how much time you want to devote to your investments. So in this video, I want to walk through the real differences between active and passive real estate investing. Not which one is better, but what each one actually looks like day to day, where people get surprised, and why one often makes more sense than the other depending on where you're at in life. So active investing is what people usually picture when they think about real estate. This is buying a rental, managing tenants, fixing things when they break, managing decisions directly, and being hands-on. In an active role, you're not just the investor, you're an operator. So you're finding the deal, you're arranging financing, you're deciding how much to spend on repairs, you're dealing with the property management company, or maybe you are the property management company. And when something goes wrong, you're the one getting the phone call. Now, this can be a really powerful way to build experience. You learn quickly, you understand how properties actually function, you see firsthand how decisions can impact your cash flow. But here's the part most people underestimate. Active investing is a job. This is not a passive role. I know this because this is what I do every single day. At Good in Development, I'm responsible for managing the construction company, signing on the bank loan, reviewing budgets, overseeing the property management company, and communicating to our investors. And that's just to name a few. This is more than a full-time job. Now, don't get me wrong, I love what I do, but active investing still requires time. This is time to manage people and time to solve problems that you didn't plan for. Some people love that. They like being in control, they like knowing every detail, and they like making all the decisions. So to sum up active investing with buying and managing your own properties, you are keeping all the upside, but you're also doing all the work and taking all the risk. Okay, so now let's talk about passive real estate investing. In a passive investment, your role is very different. You're not running the property, you're not dealing with the tenants or picking out painkillers, you're not signing on the bank loan or handling any of the bookkeeping. You're investing capital alongside an experienced sponsor team that handles the operations and executes the business plan for you. So your job as a passive investor happens mostly before you invest. This is when you're evaluating the deal and vetting the sponsor. You're deciding whether the projected returns, risk, and the timeline make sense for you and your family. And once you invest, that hard work all shifts to the sponsor, also known as the general partner. You receive updates, cash flow distributions when they're available, and you let the business plan play out over time. You're not involved in any of the day-to-day decisions, and that's exactly why most people love passive investing. Active investing is like owning and running a small business. Passive investing is like being a partner in a larger business where someone more experienced and knowledgeable runs all the day-to-day operations for you. Now, both are real investing, but just different strategies. And one of the biggest differences between the two strategies is time. Active investing trades time for potential upside. Passive investing trades control for time freedom. Neither is right or wrong, but they appeal to very different lifestyles. So if you're early in your career, want to build hands-on experience, or enjoy managing projects, active investing can make a lot of sense for you. But if you're a busy professional, have a demanding career, a busy family, or simply don't want another set of responsibilities, passive investing is often the better fit for you. As a passive investor, you receive all the benefits of real estate investing without any of the responsibilities of being a landlord. And another big difference is risk tolerance. Active investors often start with buying a single family rental or a fix and flip. And so if you're not knowledgeable in these areas, mistakes can show up very quickly. And mistakes in real estate can be very expensive. Real estate investing requires extensive experience to know how to properly analyze the numbers, account for property tax reassessments, knowing how much renovations are going to cost, and how to properly vet contractors. Real estate has a steep learning curve, and as an active investor, all that risk is on you. In passive investing, you are leveraging the knowledge and experience of a sponsor. Now, the sponsor or general partner does this every day. They know how to pick a good market. They know how to properly analyze the deal. And by partnering with them as a passive investor, you get to benefit from all their knowledge and expertise, and therefore lower your overall risk. But that doesn't mean passive investing is risk-free. It just means the risk shows up differently. This is why choosing the right sponsor to invest with is so critical. The mistake I see most often is people choosing the active route, but not understanding how much work real estate actually involves. They buy a rental, but they don't have the time to manage it or deal with tenants. Or they start a fix and flip project because they thought it looked fun on that TV show they saw. So how do you decide which strategy is right for you? Ask yourself a few honest questions. Do I want to spend time finding, screening, and selecting my own tenants? Do I have many hours each week to devote to my investments? And would I rather have 100% ownership of a single family rental instead of owning a small percentage of a larger property. If you want to learn more about passive real estate investing and how syndications work, we put together a free 7-day passive real estate investing 101 email course. You can find this at goodindevelopment.com/course. It's designed to help you understand this path clearly so you can decide whether it's the best fit for you and your goals. Thanks for watching. If you have any questions, feel free to leave them in the comments or visit our website.